Good morning. How you doing, everybody? One second. All right. You guys can hear me okay? Cool. All right. All right. So markets are following through here to the turn. And let's look at the futures. So we had a pretty lengthy discussion on this yesterday about the hourly time frame being in an uptrend and wanting that uptrend to be broken, and the turn day, which began to happen yesterday. And so now we've got the beginning of a downside move as anticipated, but this move took out the prior high. So while we're looking for a pullback over the next 1, 2, 3 days, whatever it may be, this should set up a higher low. I mean, that's the bottom here, the push above the prior high. That's what's supposed to happen after a move like this, supposed to set up a higher low. And what we have to be aware of or watching for is, because of the strength of this move, notice the bottoming tail bar, the wide range bar igniting. This was the 1, 2, 3, 4 pattern video that I had sent out. The break below the prior low and the bottoming tail and the continued move up. Excuse me. Another one of the concepts we spoke about yesterday is the greater than 100% retracement. And that concept says that after a greater than 100% retracement, anticipate a stall in the momentum, not a break in the trend, but a stall in the momentum. And that topping tail was the stall. So we put together concepts to formulate a method and a trading plan that help guide us as to the probabilities of what's going to happen. So here we got the stall. We're looking for the pullback. The hourly trend now has been broken, and intraday shorting opportunities should trend. And so we had a great trend trade in Monster Beverage yesterday, but that was a stock that was showing extreme relative weakness, and it eventually followed through very nicely. But we should be able to find more of these. Whereas yesterday, we had lots of stocks while they were beginning to turn, they had support directly below, just like this thing has. So now the futures are broken down, and it opens up the door to a move lower. Let's take a look at the NASDAQ futures. They're beginning to turn down as well. And this line here, actually moved right there. So this is where the support is, these overlapping opens and closes. We covered that yesterday as a concept, as the overlapping opens and closes in a higher time frame or a base in a lower time frame. So there's a base here in a lower time frame, and pulling back into that support level should be where buyers want to show up. Now, with the strength of this move, what I wanted to say that we have to be aware of is the possibility that buyers show up more aggressively, because sometimes you don't get the pullback to support and you can get an immediate reversal. I don't imagine that's happening today because it's the beginning of a turn, but we'll see how it all plays out, of course. And it's where we use bar by bar analysis and trend analysis and multiple time frames. And so this moved down on the hourly. You can see it's already started. It's broke through this support, and it should continue to go down. And then we'll look at this time frame and smaller time frames, looking for retracements to short that, looking for a move to the downside. The Dow, same story. Usually is same pullback going on there. Let's see what crude oil looks like. Crude oil is up on the day here. It continues to do well. So we'll see if those stocks succumb to some weakness in the market here or hold up and show relative strength. Bonds, there's the move down. And we talked about this setup right here was not one where you want to, if you take this setup, you got to give it a lot of room, right? Because there's no resistance here and it's a very shallow move up. So you could take that, but I usually do this kind of, I'm going to do it with a smaller size looking to add. And here you have the topping tail that was a breakout failure. So bonds are now moving down. Yesterday, we spoke about bonds moving down, interest rates moving up. And that was the fear in the markets or market participants a couple of weeks ago when bonds were moving down, rates were moving up, and lots of talk about inverted yield curves and what's that going to do to the markets. And that got forgotten. And now we'll probably start to hear about that again, especially if we see bonds break below this level. And let's just take a look at TBT. That's the ETF. And so it's not even close to that area over there, which is interesting. But this is moving up above these highs here. It's going to catch the attention, already has caught the attention of the markets, that interest rates are going up. That's what they're focused on. And some stocks, the VIPs. I remember we talked about this one. I think we had a day trade in that last week. Looks like it's getting shellacked here this morning. And Home Depot's down a little bit here. Earnings are coming. I don't know if they came out already. I haven't followed. Tesla. We had a trade in this one. This is doing great, going lower. Apple pulling back here a little bit. Notice this topping tail. Right? I know it's the overnight data here, but I love that kind of price action when we're looking for shorts within a downtrend. And this is a bit of a large topping tail, but take the concept here, meaning if you have a downtrend and prices spike to the upside and come right back in again, that's a great sign that sellers are just all over this, trying to take advantage of getting out. Now, you have to put that in the context of here intraday and a pullback that's starting after a strong move. But we always take individual concepts like a topping tail that broke out as this did and failed, and put it together with other concepts, meaning multiple time frame analysis, trends, and such. And what else do we have here moving? Financials. Okay, so they're pulling back a little bit, and today may be the day for Goldman Sachs, which is actually holding up here. But I like this for a shorting opportunity because it was showing relative weakness. Notice the moving averages pointing down. It's below the 200. Yesterday, it tried to move higher and it failed. It just needs to break this support here, and that should open up the door to a move lower. I just like to look at JPM because it tends to be the leader in the group, and it has been, but this should pull back as well. Right? But Goldman should be a better opportunity intraday since it showed that relative weakness. VRX is actually up here. Okay, this has been turning around, and this was in the news last week about changing its name, trying to get away from that negativity that surrounds it. Maybe that'll help. And look at what else here in the list in the active Facebook. So not everything. We'll be watching for what doesn't turn lower here and showing relative strength for when the market actually, as it pulls back and turns around, what doesn't go down should lead the way up. So that's something else that we'll be keeping an eye on. And Netflix, really not interested in this. So some of these things I couldn't find yesterday as I started to look for a lot of stocks that had moved up and stalled here. If we could find call spread opportunities where there was enough premium to make it worth the while. And I couldn't find any because I was looking for things that would expire at the end of the week. So it's kind of like asking for Christmas to come early, but sometimes you do find them. And when you do, it tends to be relatively easy money and requires searching. through the patterns and then looking at what's available there. And today we're going to go through retailers as well. I'm going to go through and do a thorough scan of stocks within that sector, because retailing here, in the advisory letter, when this broke out and the weekly chart had given a buy, we got in on a pullback, and now it's going up. It's up at this resistance area right here. We're going to see how it deals with that. But these stocks, they look like, if you're looking at the weekly chart, which we can do, I believe they are going to help the markets advance. And these are going to bring up the rear, so to speak, as these retailing stocks start to move higher, because they moved up at the end of last year, but they've been really knocked down considerably. And everybody says, that's Amazon's fault. Probably is. And transports. Let's get rid of that. This is something we're going to have to watch. We will watch over the coming days and into next week to see if the transports, how they hold up at this resistance. Meaning, I'm interested, do they collapse here, which is going to be a negative for the market, or do they show some relative strength and absorb this resistance or supply that's up here and chop around sideways? Because if this is going higher, the markets should be going higher. And that is where, opens up the possibility where we're going to see new all-time highs. Now, the S&P 500 is a considerable distance from there, but the Qs are within striking distance. And of course, the Russell is knocking on the door right there. It had a reversal day yesterday. So, and we're looking for weakness over the next couple of days. And will that weakness result in a move lower to some area of support? Or will it go sideways, which will show amazing strength? And when I say strength, buyers being in control, buyers continuing to show up here even after an advance like this. This type of advance typically results in a pullback. But if this can go sideways, that means that demand is extremely strong. And of course, we're going to continue to look for higher prices. With that being said, Dan, I turn it over to you to go over the open positions and gappers. And I guess the earnings are starting to peter out as far as what's coming out here. So,
yeah. Hey, good morning, all. Yeah, I was just looking at my earnings sheet also, thinking the same thing. That shoot, we love the gaps, as you know, but there's still gaps all the time. So, I just had Budweiser on here that I saw on the ticker going by. So, we're here at 93.5. Look at that. Just these things have been, decimated. Absolutely no turn. This is not a quality climactic buy setup. I mean, it's just junk, and it still is junk. All right, back to, nice out though yesterday on our puts. Remember I told you I closed my short puts for June, and I'm still long the out of the money puts. Now, they're not going to be up huge because they're far out of the money, but I just left them there, and we went over the reasons, right? So I save a commission. I know I'm going to be reloading. There was 34 days to expiration. And so I will sell the short puts when I get a new bullish spider setup. And so now I've made a little bit of money on these out of the money puts. So somebody was asking me yesterday, when I close a spread, do I close both legs all the time? And I said, no, not all the time. And this was an example of why I was saying I'm not. Another example could be when there's, you would be selling it at a penny, and it cost a penny of commissions. So just leave it open, and then you have a lottery ticket, I call it. If you get a catastrophic gap, then that out of the money call or put might turn into money. Like Greg said, you know, Christmas comes early. Opens. Our XLE, we got, you know, our puts. No, we have a covered call in this, but it's still an in the money covered call. So we have zero damage to us. I mean, it can come all. I think I have to look. I think the 75. So we're capping our gains, but again, we've been lowering our cost basis week by week. XRT looking good. So yeah, I'm looking forward to Greg's, you know, detailed scan. XOP put spread. We're up. I looked yesterday. We're up like 75% of max gain, but it's way the heck down here, the 38s. And I actually say no stop because we would take it, but yeah, I think I'll adjust that and just, you know, tighten our stop to guarantee a win. WFC put spread. We covered half yesterday, actually. Intel put spread. It's down a little bit, but we're fine. CSX. We have a covered call. Oh, wrong symbol. CSX. You know, we nailed that. We shorted the $64 calls on that bounce on Friday. Caterpillar did not trigger yesterday, but it's still a valid play. So let's see. Yesterday's low. Well, you know what? I need to tighten. I need to tighten the entry, which that's 154.39. So we're gapping under yesterday's low. But this is a bear call spread candidate. And I'll put that in a little window here. And we have a limit, so even though it's gapping under it, we're fine if we get filled there. Same with Teradyne. It did not trigger, but it's valid. Bib, we got filled on the put spread in the main advisory letter, not on the weekly one. So I'll be watching that today. I have it in a little window to see what we can get paid for a Friday put spread. RTN, gapping under this base. We covered half yesterday into this collapse. And so now that we're gapping under here, now it's a no-brainer. I'm going to move the stop. You know, I can just eyeball it here, you know, 210, but, you know, I'll keep an eye on it and adjust that in Telegram shortly. Tesla, we covered half. We had a nice move yesterday. That little, you know, shakeout, failed breakout. You know, and remember, we only got filled on the bounce yesterday, and that's why we do that. Because if we got filled when it took out the low, it would have been significantly less credit. So we made 50% of max gain in just a few hours. And I think I said bid a nickel or a dime for the back half. So I'll see what the credit is at the open. So, you know, we're still in half. We're still in the Junes. We had another put spread expire worthless yesterday in the weekly. So that's doing fine. I'm still watching this NVIDIA to see if we can get a double top here, but you can see now it's gapping down pre-market and it's at 252. But, you know, he's another wild beast. And we'd be fighting the monthly and weekly, but I'll be watching this for a Friday out of the money call spread. Visa, we have a covered call. And, you know, I'll be adjusting all of these in the open spreadsheet, sending out alerts. Cake, we did a covered call yesterday on that, you know, on the weakness. So that was nice as a partial hedge. And that's what covered calls are. It's not a full hedge, right? If you there's no such thing as a full hedge. Well, there is, but then you aren't making money. So I'm not a believer in full hedging, because if it involves buying a put, that costs money. Just get out. Let's look at some of these gap plays. Now, APA it's not a gap play, but I put it here. You know, I was just reading something in the Wall Street Journal that mentioned it, so I didn't read the story, but I like looking at stocks that are in the news. I just want to see if there's a pattern. And this is kind of a reverse head and shoulders here on the daily, right? Ugly red bar, no follow through. So that's my head, left shoulder, right shoulder. You know, it's sloppy, but it's a put selling candidate. And also in the news yesterday and in today's paper, but I missed the news yesterday, so I don't know if it came out intraday or not, but that the U.S. Supreme Court is struck down the federal law that prevented the states from passing their own gambling laws. So remember how we trade news? Ask yourself, is that good, bad, or indifferent news to gambling stocks? Right? It's common sense. That's great news. Because now you're going to have all these states, and the newspaper said New Jersey was the main plaintiff suing the government, and then they had 28 other states attorneys generals joining. And what they do, what that's legally is, they just write a brief in support of the plaintiff's position, even though they're not part of the lawsuit, and it's just called like, hey, a friendly brief. But they're all fighting the same position, and they won. It was a 6-3 decision, which is shocking to me in light of our, polarized politics. You rarely see, something that defined. So anyway, with that background, we should be looking at some casino stocks. Yeah, there you go. Amicus brief. Thank you. What did I call it? A friend of the court brief. So there was a nice 1, 2, 3 yesterday, but at resistance, but it broke out of the weekly. Boyd. I looked at some of the others. They've already run. LVS. Win. It had a failed breakout. But, you got Penn Gaming. Look at Penn, had a nice day. Look at the volume. So, Greg, when we're looking at retail stocks, I think we should, use your excellent telechart and see if we can find any gems in that department. In the video we talked about, Cron, I saw this gapping up. Really no pattern. Look at this weekly, though. Wow. Look at this expanded volatility. Gapping up to 691. There's nothing there. Nothing there. DXC was gapping down 101. I have no idea what that's going to do. We'll keep an eye on it. What is this thing? Wow, this kind of looks like a penny stock to me. And then boom, the promoters. Well, it's not a penny stock, but same kind of concept. This is weird. Maybe it's a biotech. But usually stocks like this that have no volume and a coma are penny stocks. But this was in a coma at $5. So that's strange to me. But, boom, came back. Buyer stepped up here at the 20. You got volume. It was gapping up pre-market, as you see here, to 23. And now it's flat. I'm going to look up what that is just because I'm curious. Now, this I like a lot. And I think I remember talking about this gap play here. and then you see the tail, so it kind of sold off, and then I stopped watching it because there was no pattern. But look at yesterday's little green day. Gap up, narrow range green bar, relative strength, right, to the market because it closed at the high. And now look at it. This is pre-market, so it's gapped up, you know, if that tail's real. And now look how tight it is. I mean, maybe, I don't know if this is a buyout or whatever, but I like that because this is a gap breakout following this pro gap, and it's a breakout on the weekly and monthly. So I'm going to put this in a little window. But for a relative strength bullish gap, it looks great. Switch had earnings 14 and a quarter. It's a bearish gap down. But I like this W bottom on the monthly. This would have been a fantastic gapping trade if it, you know, gapped over 16, the low 16s, but it's not. It's gapping a 14 and a quarter. So our Tesla that we mentioned, we're in. See, it's bottoming here pre-market. So let's say 286. Well, it's not a catastrophic gap, but it's, you know, I'm going to be inclined to take our profits. You know, why stick around? We still have 4 days left of risk. SBLK, and you know, I saw this one print up here, 1350. And this is one of those star bulk carriers. Remember, we were fooling around with these, trying to nail the low a long time ago. You know, and they couldn't get off the ground. Call spread on CAT. Yeah, John, we talked about that. Yeah, definitely. So if it triggers, fine, but we're going to still look for our limit. And then we'll see how it sets up and see where the premium is at that point in time and decide whether to enter it or not. But look at this monthly. I mean, these things have, look at this data. My God. For the last 3.5 years. Look at this thing. And this is all because of reverse stock splits. Look, $1,100. So Greg, I think we should scan this sector too, actually. You know, so that's still in a coma, but weekly is higher highs and higher lows with a rising 20 and 50. So so now we have 3 sectors to check out.
Which sector is that? It doesn't say on your chart.
It's the bulk carriers. Remember SBLK? Remember, I had like 5 favorites at the time, and I forgot. Eagle, I think, was one. But it's the bulk shippers. Yeah. Look at Eagle.
Maybe, you know, with oil going up as it has now, but we went to those things a few times over the last year, and just like a lot of the energy stocks, there was a lot of start and stops. And, you know,
that's exactly what I was just telling him a few minutes ago. That we tried picking the bottoms on a few of these, and they didn't hold. Okay. But let's scan. All right, MU I have here for relative strength gap relative to the market, right? So 53.79. This could be a beautiful 30-minute high trade, both for a day trade and put spread. All right, these earnings and then the bell's coming. So VIPS is $12. That's a nasty gap back to this weekly support. Agilent, there's a nasty gap down. We'll see what happens there. And our Home Depot. Now, shoot, it rallied here pre-market. When it was at 185, 186, which is right here on the breakout of this daily, 186, I totally had in my mind, Dryer's another one, yep. If it could take out a 30-minute high to sell a put spread on it. But this bar right here would have been ideal at the market open. So I'm going to put this. Oh, I see Greg's snap is snapping a little bit over here. So I'll be watching Home Depot for a put spread. Finally, this one had earnings, and that's total garbage. I'm hitting the delete button. Our RTN. I'm just going to move the stop right now. All right, let's see where our new stop is. Do you want it this pivot or give it the extra room? I think this pivot is fine because if it drills through all this resistance, then it's probably, you know, it'd be extended, but then it'd probably pull back and before it, you know, chugs some more. So I'm going to move the stop because I love protecting gains. And I'll even give it another dime here. So see 209.60. And I always love giving 2 cents extra. So I'm going to move the stop to 209.72. I just put spiders in here while we're watching. Spiders 5 minute are just going sideways, doing nothing. All right, RTN 209.72. Move stop. Send a telegram. Yeah, that Dryers. Yeah, I remember trading him, and I call him Dryers ice cream. Yeah, it would be helpful if the market did come back for 3 days. You know, reversal bar, minor support. So I'm voting for lower prices because let's say it held right here and took out this pre-market, you know, pivot right there. There's still no pattern to go long. So I rather let it sell off and give us a new setup. All right, let's look at this cat after I post this. All right, cat. All right, so cat triggered. Now let's see what the credit is. I said do the 157 midpoint, but a limit of 75. I seriously doubt we're anywhere near that right now, unfortunately. And that was for the Friday expiration. 157.5. Yeah, we're nowhere near it. The midpoint right now is 31 cents. So, you know, but remember we were talking about, here, let me look at the 15 minute. Remember we were talking about, hey, in the green room, we can find a better entry. So this was yesterday, kind of had a double top, breakout failure, breakdown. That would have been an entry right there. Double top. And then would I have done it into the close? I don't know, but that was a nice entry right there. All right, market picking up. All right, dryers here. Jeez, look at that thing. So bearish bias now. Our DHI is not looking good. Oh, shoot, let me see what our stop was. See, remember Google yesterday? We closed at 5 cents a share. Looks like this DHI stopped. Yeah, hey, Dan. Well, Dan, again, you call it, you know, schizo, and I guess we all have our different opinions. But no, it's totally acting the way it should right now, in my opinion. Now, if anyone's in this DHI, I would just give it, you know, the 5-minute low instead of taking a stop here. And it still looks horrible, you know, gapping under the symmetrical triangle. Look at these converging MAs. I mean, it looks bad. It looks like a call spread candidate now. All right, Tesla, let's see. Let's see what our credit is now. We did the 315, 330. Midpoint is 11 cents. And I said bid 10 cents. So I'm pretty darn sure that would have got filled on that, you know, another penny on that little leg down there. So I would say close. Yeah, I looked yesterday, David, and I liked it, but there was not enough juice. So we're going to go ahead and close our back half of Tesla at a dime. I like it, David, if there's juice. And yesterday I was looking at the 160.5. All right, so Tesla, I don't need to send out an alert because yesterday I already said bid 10 cents. So you know, I don't need to send you an alert. So very nice day, and it was a one-day trade in terms of, you know, overnight, one day of trading. Yep, Qs have error. That still looks lower. Yeah, IWM looks great. Yeah, I mean, this cat looks great, but we aren't getting the juice that we wanted. MHK.
Hey, everybody. Let's short XLK here at 69.19. Or take whatever and give it. Let's start like a dollar stop. I'm going to tighten that up pretty quick. You know, I don't know how quick, but I don't know if it's going to retrace the way the markets are moving down. So I'd rather put on like half a position. Don't go all in because, you know, I'm going to give it that much room, and I'm going to look to add to it if it does move up towards a 69.50 or so. But if it just drops, you got something in there, because this looks like it could come down, you know, a decent amount.
Wow, look at this NVIDIA. That looks great now. Let me see what we can get for the 260s for Friday. Caterpillar tanking. Yeah, NVIDIA only, wow, only 35 cents now for the 260s. Yeah, see, I was watching it. I would have loved to have gotten an hourly double top, but it sure looks like a short-term top now. Wow. I'm just going to delete him for now, but he is in pain. APA, I'll delete. Boyd, well, let's see if there's any juice on the Boyd. If we went all the way to June 33s, 30 by 50. That's pretty spready. I'll watch him on the other computer. NVIDIA, other computer. Okay, remember I said I don't know what to do on this, but yeah, I still don't know what to do. We can find better, but it's a call spread candidate actually. Yeah, look at the weekly engulfing. Let me check calls. DXC Technology, never heard of it. So that's if I been trading 25 years, have never heard of it. There's 98% chance it's spready. And here you go. The 105s are a dime by 45. And if you go out to June, 90 cents by 165. So told you. IMTE, that's just junk. I'm not playing. Well, I'm just curious what they do. But you can look at this in the meantime. So that's communication services. Audio stereoscopic 3D display technology.
Sounds
Australia.
impressive.
I don't even know what that means. Teradyne, let's look. Yeah, looks great. So do you want to swing it or call spread? Okay, well then you know the drill. I can see 37.20 right there. So 37 would be tighter, 37.50 would be better. And how much time do you want to go out? Now, if you ask Greg, he'll say 2 hours.
That's too long.
But for
if you can find something by the end of the week.
Right, that's what 100%. I'm doing. So 37s are 15 by 35. So that's too spready. But what you could do if you want to play market maker is you offer out at 30 cents. See if you get filled as low offer. And then you just put your stop over here. And this one actually could be an example that if it trades back over yesterday's high, then you buy the stock. And now you got yourself a covered call that will get taken away from you on Friday, would be the plan. Look at this MSCC, still in a coma, so that looks like a buyout to me. I'm not messing with that. Switch is garbage. We talked about this bullish W, but now it looks bad. Tesla, we talked about, made our target right at the low. That looks good. What about our MU? No, but if it can go sideways here at the prior high, when we turn bullish, we'll keep an eye on that. VIPs, big old ugly gap, but no pattern. Same with Agilent, bearish gap under support, pre-market here. It got extended, range expansion bar.
I'm going to short Square right here. I guess you can get it 51, 52. Dollar stop. They don't look like they're going to bounce. So I'd rather start with something. That's SQ.
All right,
This
I'm checking.
TER looks great for a short, but it's not retracing at all. But some of these things, they don't have to, meaning whatever. Trying to get in now, obviously it's more aggressive if you're going in full, but bigger stops, smaller shares kind of make it like almost doesn't matter the entry. If you look, if it does retrace, we could add to it. But and if they waterfall down, which is possible, you have something.
Hey, I like that term, waterfall.
I mean, Dan, you know the story. I mean, how many times did we wait for the kind of pattern that we want? Doesn't happen, and left at the station watching the train pull away.
Well, and particularly, and I've learned this through you over time and experience, particularly with the wide range igniting bars.
Yeah.
On the hourly, and it looks extended. Well, on the daily and weekly, it's just starting. And so those I have become more aggressive on. All right, so this bib hit for the weekly put spread. So I'm going to record that as open. Now, say, remember yesterday, we did not get filled, but I left it open because it was still a valid trade. If it had a bearish gap today, then I would have canceled it. But, still looks fine. And we got our limit entry now.
Dan, what about that call spread on Goldman? The techs are getting hit harder, but I mean, it was the worst looking, and it's in a downtrend in the financials.
Right. So let's see what XLF is doing. Wow, XLF's relative strength to the Qs today.
I know, but this Goldman is getting sold.
David, let me look. 10 days. I would prefer, David, myself, only doing it this week. Here, I just had another alarm on a riot going off. Look, it looks good now. I'll come back to that, David. Let me just look at this real quick. I mean, if you're wanting to, back to that Ameritrade, you're falling out of the basement window commercial. If you're wrong, buy 100 shares and see what it does. I'm looking for puts. We could go 10 days. The 7s are 20 by 35. Greg, do you mind telling me earnings on Riot since Yahoo doesn't have them?
The 21st
of May?
Yeah.
Oh, shoot. That's why they're... well, I mean, the pattern looks great. I'm tempted to buy 100 shares or sell a put, because why? If I'm willing to buy the stock, well, then you should be willing to short a put, because you got cost basis improvement if you get assigned. So I think I'm going to do that, actually. The $7 for June, 65 by 85. I'm going to do a 1 lot at 75. And he didn't fill me at midpoint, jerk. So I just leave it there. All right, Goldman, I'm looking for Friday, the 247.5 is 52. You go $5 wide is 45 cents. So how confident are you that it's not going to take out yesterday's high by Friday? And 45 is close to my 10% rule of 50 cents. I personally would say, just put it in a thumbnail and watch it. And, because it's engulfing right now at this head and shoulders reversal right here on the 15. UAA, yeah, Sankey, I mentioned this. Yeah, very nice. That's great. Remember yesterday, I don't know if you were listening to me or you came, did your own research, which you always do. You're a good scanner. I mentioned UAA and BBY. But I like UAA better because of the weekly. I like it. I'd like it. That's a go. Look at this weekly. It's beautiful. So here's another example of what Greg and I were just talking about. Do you want to buy it here with, 5 green bars on the 5-minute chart? Now, I would say it should pull back just because of the market environment. If the market were an, all-out bullish green day and the retails were strong, then I would say, jump on board. But I think you can get some price improvement, and I'm gonna check puts myself.
If you missed the SQ when I said it, I know it started to move. It's okay to do it here. It's back up to where it was, but the same stop, which will be over that little base on the 5-minute chart, which is above 54.50.
Yeah, I'll watch it, but it looks good. I love this weekly. All right, so I'm still in my spiders long puts, and no reason, it's bearish. I'm just gonna hold them. All right, that Teradyne hit for the swing short. Now I'm gonna use the stop. I'm gonna put the stop though over yesterday's high. So 37.22.
Bonds and oil are dropping. I don't see this market's going to bounce. I thought it was.
Yeah, and gold also I saw this morning. Let's take a look at those. Hold on, I'm just updating Teradyne here.
I think that the interest rates going up is what's helping the financials to show some relative strength here.
Oh, nice gap breakdown. So, Greg, you got to tell us when you want to put on a new core trade in bonds or TBT.
Honestly, there's like easier money laying around right now, so I don't even want to look at it. We'll come back to it at some point.
All right. Yeah, charter looks lower, Sanjay. Sure. Looks good right here. Right here, it looks good. So the only question is, where's your stop? The day's high? Yesterday's high, if it's a swing trade? Or, do you want a super tight stop over this, over this tail right here on a 2-minute? So those are different options, but market weak, it looks great right here. I like it. And for me, let me look at the 280s. Oh, shoot, I did 280s for Friday. If they weren't spready, this would have been a beautiful setup. The 280s are 65 by 220. I ain't touching a spread like that, but to call a high, this 280 right here, for 4 days, that looks like a no-brainer setup, but it's too spready. I can't do it. Let me go out to the monthly and see how liquid that one is. And you know the drill, I can go further out in strikes. I mean, it's juicy. You could even, the 300s, 115 by 350. Can't trade that. But I like the pattern. Yeah, we're coming in. Perfect. I mean, a beautiful, let's look on the hourly of where the various targets are. Look, there's no support here. Look at this congestion. So that's probably first target area, 269.70. And then here, this would see all this support here, pivot high, pivot high, pivot high. That would be my reversal area on the daily chart. So 268.40 area. See how that lines up? And that'll be right at the you know, converging, rising 2050. So yeah, I want more pain. Munster, that still looks lower. Yep. Oh, nice, Pat.
Awesome, Pat.
Greg, Cindy's asking you about EVHC.
Hey, Cindy, let's take a look.
Yeah, I got it here on the daily.
I like the daily, but market not great right now, obviously. And we're looking for it to turn and do well in the coming days or next week. But the problem with this isn't the entry; it's the stop. So just like the XLK and the square shorts that I put on, I was like, I'm not going to get that perfect type of entry. That was my perception. So I just smaller shares, bigger stop. And you could do the same thing with this to initiate the position, because sometimes things just take off and you miss it. So I'm not against, I like it intermediate term, the pattern and all. So if you can start with a small amount, a few shares to just keep your eye on it so you don't lose the attention, that's fine. I mean, it's pulled back. The hourly is beginning to stabilize. Another thing you could do is, of course, wait for the hourly time frame to make a double bottom.
That's exactly what I was thinking. I like that idea.
Because it could keep trending down toward the gap fill below. And ideally, it should not fill that gap. And the reason I'm saying that is, it's a powerful gap. It came up with two wide range bars and then gapped up near the prior high. So there's definitely going to be sellers there. So ideally, it doesn't come all the way down to fill the gap. So on the hourly chart, if it can start to base out, that would be, a setup to consider. But in any event, this move up creates what I call that void. So I would still start with a smaller position and look to add.
Greg, I got a fourth sector now. I think we need to scan our banks. They're holding well. Look at this KRE monthly.
Yeah, it's those regionals. I prefer the ETF than some of those banks. I mean, they tend to move slow. And
all right, Cindy also asked about this triple D. I like the hourly. I like the hourly a lot. Gap down, wide range igniting.
That's that printing stock.
Yeah, 3D. Yep. It got clobbered. Yeah. I mean, nice weekly. It's not a core trade because of this monthly.
I hear you. I'm not a big fan of bottoming patterns. I mean, not when they first start. Just like looking at that monthly as it poked up and came back down again. It's building, and that building could take a few years. I like to see a confirmation of a break of some resistance. I mean, look at G Pro. I mean,
here, look at this fossil first.
I know it's another one that's bottoming. You got to be careful with those as far as thinking like, oh, it's got such huge upside potential because it's been so crushed.
On fossil?
Anything in general.
Well, I mean, no, I hear you, but you said this one's still bottoming, and it's in an uptrend on daily, weekly.
Well, I'm looking at the monthly there.
Yeah, I mean, you know me. It would be a put spread unless the monthly. Well, I think the target, yeah, is 25 bucks. That's still, you know, $5-6. But, you know, we'll scan retail and see if we can find a better one. And I'll see what we can get. Even selling a, you know, 17 put.
Little bounce coming here. Let's see what it'll do. Qs came down to like minor support on the hourly. But now what we want to see on the 5-minute is that, well, either that it can't go up very much at all, but definitely makes a lower high. Why couldn't Snap drop like that yesterday?
Yeah, this like Dropbox is a big old mess. Yeah, that looks like a core short to me right here. Another example of, you know, is it going to bounce? Who cares? Just short it. Let's see what a bear put debit spread looks like. Pat, what time frame are you trading? If it's a swing, it still looks lower. If it's a core, it looks lower. If it's a day trade, here's 15-minute chart. It depends what your management rules are. You know, here's a 5-minute and it's climactic. Do you want to trail half over a prior bar's high? And that's where your trading plan comes in, of how you manage per what time frame. All right, we'll see. This is another example where I would take half over a prior 5-minute bar's high, even if I'm a few cents away for a double. Saying, you know, a double, that's just arbitrary. Well, Snap's juicy. We could do a 13. A June buying an in the money $13 put, selling an out of the money $10 put would cost $2.13 a share, and that would give you a potential maximum gain of 87 cents a share. And, you know, your debit is always your maximum loss, but we would keep our stop over the base and never incur a maximum loss. I'm just looking at some stocks on my other computer here. Oh, BMY is still trying. I mean, the fact that it can even go sideways here is building support, but there's just no juice in those 50s. Going all the way out to June. Well, June has juice. The 50-45 is 55 cents, so that's over our 10% rule. I'll set an alarm at, 52.08. This oil thing Greg mentioned the other day, I've been watching, and NDLS. Look at that, no pullback. But a, nice daily, weekly breakout. Caterpillar was nice, but we didn't get our credit. The DHI stopped out.
That TER is weak. It cannot bounce, which means it's going lower.
I'm moving stop on Visa to today's low. Nice, Pat. You are our short-term option buyer extraordinaire. Hey, Thomas. Jeez, Greg, I'm trying to update these alerts. Keep getting this stupid 500 internal server error. But that was the first time I got 2 in a row. So it's not allowing me to update.
That's what I'm going to be doing in a little while, as we get closer to the doldrums, is start scanning probably a lot of these technology stocks, the ones that aren't bouncing or bouncing very little. So what we're going to look for in the afternoon, as far as, assuming that the market stays weak, these stocks that are extended on the dailies and rolled over on the hourlies, but now short-term extended to the downside on the 5-minute. Wait for those 5 minutes to start to consolidate, and I'll show you how we look for the moving averages to catch up, and then we hit the bid a little later, looking for them to go lower.
Fuck.
And stocks like this MU that Dan mentioned, that thing ripped off of the low. It didn't get back to the high, but that's decent price action for something to look at later on, assuming it continues to hold up and act this way. It succumbed to the selling, but the bounce was eyeballing it, probably close to 80% of the drop. And that Teradyne cannot get off the mat at all. Also, let's keep an eye on Zen. We had a nice trade in a week ago. It's holding up pretty well. Doesn't mean it won't come down some more, but that's coming down from new all-time highs. So that's going to be a good one to keep an eye on. Yeah, look at the 5-minute, Pat. I'm just looking for this to ideally hold around this area and start to reverse to add to it. I mean, this is, we got in with a big stop. So now it's like it has to develop to where maybe it forms the pattern where it would have initiated the trade. Have to see. If this continues to go up and by chance gets up above the high of the day and holds there, I mean, that's not what I'm looking for. That's, who knows? I mean, I'm looking at the daily chart and the gap down, and that kind of pattern, with the hourly broken suggests that it'll go lower. So now I'm just waiting for the 5-minute to set up, and ideally it happens around here, which is about half of the move up off of the low from where it started the day back down. Oh, it's probably been picked pretty clean over the last 25 years. Those aren't dumb questions at all. Believe me, it's the best way to learn. Back in the late, now you're going to get an idea of how old I am, but it's not even market related. It's just related to asking questions. So probably 1977, something like that. I started my first career as an auto mechanic. I went to school, it was 76, I don't know. Anyway, I started in a dealership, a Chevrolet dealership. And I first went to school out in Colorado, so I went and got an education. And then, then you get your experience, markets are that way. And I would go to pick the brain of the old guys. These old guys that were fixing cars for the last 30 years, how do you handle doing that? How do you do this? And you learn so much from someone that's willing to share experience. It's fantastic. So no, it's not a dumb question. And back in the day, can you imagine, it was called an automotive college. And so all the mechanics there was no school, to learn how to fix a car. So they were like, oh, look at this guy, he went to a college to learn how to fix cars. So they used to call me college boy. Wow. If I would have brought something like that in the house back in the day, my mother would have killed me. Things are a little quiet here, so I'll tell you another story that was kind of funny. Back when I first started working on these cars, it was at the end of high school and starting regular college, so to speak. And so I had this car, I'm rebuilding it, used to take it down to the track, and I pull the engine out on the driveway and take it apart, put it together. And open it up and start the engine with open exhaust. And I walk into the house one day after, shutting the car off. My mother's sitting there on the couch, crying her eyes out, hysterical crying. Like, Mom, what's going on? What happened? Why are you crying? "Oh, you're going to kill yourself in that car." I'm like, no, Mom. Anyway. And eventually, years later, it's like I discovered the stock market. And started a new career. Yeah. My mom passed away just before she was 90. But, she got older. Obviously, everybody needs help as they get older. And she came to live with my wife and me for the last couple of years of her life. And, was good. And that I got to talk to her every day because, when I was younger, it was like, I'm doing my own thing. I'm not really talking to anybody too much. Well, of course I did, but it was like my focus was either, building my automotive business and then was like learning about trading. So everything else was secondary to where my focus was, which wasn't really a good thing in a lot of ways. Yeah. You're funny, Pat. Sound like a little bit of a tomboy. I like Goldman here. I was just thinking I should short this. And I should. I need to give it a dollar stop, might be too tight.
And on that call spread, somebody was asking me about it. Looks better now, of course. Yep, I like that 5-minute breakdown.
I'm going to do it. And I'm going to add a little bit to XLK here. So not full, I'm going like 2/3. Trip. Well, that looks good. Came back from the gap down. It's building. It's building a base after the gap up. So when is it ready? That's a tough question. Looking at the weekly. See, this is a bottoming pattern on the weekly that has taken out at least two. There's a breakdown failure, and it took out two prior highs and almost a third one. Now, the wide range bar on the weekly that you can see in Dan's chart on the lower right, that's not a real bar, meaning it's a gap up, part of the gap up there. So this is now creating new support. And today's price action is exactly what you want to see when it gapped down. So the tough part is, getting in, which again leads us back to a big stop because you don't know what's going to happen. I mean, it could come down You know, I don't. It shouldn't fill the gap. It should not fill the gap. It should not even go below that low that it gapped up from. Ideally, it goes sideways here. So I don't think it's ready yet, but who the heck knows? I mean, you know, putting on an initial position, even something small, just to keep your eye on it, because it does look good.
And there's the put spread.
Or, Dan, this is probably a good one for even a naked put.
Yeah, I mean, buying the 42, or you can buy the 41, and that's only costing you a dime. So then the question is, you're paying a dime of insurance, you know, to make it a defined risk trade and less capital. Is it worth a dime to you? That's what you're giving up.
What about, well, a dime isn't much, but what about selling a put?
I mean, that's fine. That's always a choice. I'm just giving you two flavors of trades.
Mm-hmm.
So the 46.41 is 55 cents. And his brother, Expedia, not as good. And what's Priceline's new symbol? Booking, BK. Actually, we looked the other day. Yeah, that's still a dog. Nasty double top on the weekly. Oh, Goldman. Oh, yeah. It's an engulfing bar now after new low. But yeah, I like that trip play. I'll watch it into the close. It's still in a sideways consolidation, but Overstock might be a put candidate. Wow, look at NVIDIA relative weakness today. Wow. Look at that, zero bounce with the market right now. Last, half hour. Even Pterodon's bouncing and NVIDIA's not.
That's unusual.
Yep, we stopped out of the back half of this RTN. But at a nice profit. But Dan, I have no idea how much NVIDIA is tied to Bitcoin. In reality versus whatever.
They say that was part of the reason it went up as much as it did. But I mean, technology is used in a lot more than just making those mining things. And look at the monthly chart of NVIDIA. I mean, it's like amazing move that it's had over the last year or two. So these, the spiders, Qs, even the futures, this should be where they're going to turn down if they're going to maintain the 5-minute downtrends. I'm still in this Goldman Sachs. It was a little unnerving, a little bit, that 5-minute bar, but it didn't negate the bigger picture. So I gave it the room. The financials holding up pretty well again because bonds, they tanked today. Walmart continues to hold up. I was hoping that would break down, but it's not going to happen.
Well, it has earnings, though, so, you know, it might. Earnings, I think, Thursday, maybe? Is MU2 extended? On Florence, on what time frame? On the daily? No, it's not. It's kind of 4 bars consolidating at a prior high. On the 15-minute, it is, yes. So I would recommend, let's just watch it into the close. It's approaching 11 o'clock. You know, market bounced and is reversing. with a lower high on the diamonds and, or, Qs and spiders and diamonds. IWM filled the gap. So just, yeah, be patient, watch it into the close.
I'm just waiting to see what happens here, folks. And got the turn, the retracement, spiders and Qs back up to where they started the day, the open. So from the short-term bearish point of view, ideally they don't get back above the opening price. All right, XLK is going back in the right direction now. See if it'll drag the market down with it. You know, Cindy, it's up. It's a pretty powerful move. It's up against the prior high there. 1370 from March 15th. I mean, and it went from $9 to 13 and change. And it's a bottoming pattern. If you own it from lower prices, and the way that's moved, if I had it and you want to hold it, I would try and sell a call spread, a covered call on it and take in some money. At least you lower your cost. If it does pull back, which it probably will, or go sideways. So that kind of a pattern is, pretty good odds, to sell a covered call a little bit away. And of course, the downside is if it keeps shooting up, they take the stock from you. So you just, you're limiting your gain. But, I'm not a big fan of these bottoming patterns that they're going to continue to move up. And, you're going to get some kind of fantastic move out of it. But, that's the trade-off. Yeah. So let's take a look. So let's, to play it tight, because when you look at options, of course, it's like how much money can you get and how long. So if you would be happy to get, well, I don't know, it depends on where you own it from. So if you bought it at $10, I'd be happy to make $3 on a $10 stock. But you could sell a $13 call that expires in 3 days, you could probably sell it for 45 cents. So assuming if you had 1,000 shares, you would take in $450, sell 10 contracts. And of course, if it went to $14, you didn't make that. They're going to take it away from you at the end of the week at $13. And I'm looking, to sell the $14 one, which is okay. Probably it's not going to $14 in 3 days. You'd be able to get, say, maybe 20 cents, 22 cents at the midpoint. Well, no, that's $13.50. But it's only 3 days.
Well, look at retail coming back here. Gap down, new high. Well, and just to add one comment to Greg, they don't have to take your stock away. You can either buy it to close if you think the stock's going higher, and net, you still did not lose money, regardless of what you close it for. Or you can roll it to next week, like we're doing with, Visa, CSX, XLE. What else? Cake. We have a number of covered calls on.
Our favorite amigo Juan is in YouTube.
Oh, nice. Wow, look at this UAA that Sanjay mentioned earlier. Very nice move. And do you remember we said? Well, I remember, but this is another example of, if you won on board, it looked extended at 1860 this morning, and now look at it. Yep, retail is doing well. Look at this SBLK we were talking about pre-market. Look at that big old topping tail now. But we have retail, these bulk shippers. We have banks. And what else did we say we want to scan? Look at this fossil keeps going. That's a great put selling candidate. I was looking at the 1714 earlier. It's 37 cents. I think it was, it was 40 when I mentioned it earlier. But it looks great. I'm gonna do a small lot here. I'm gonna put it at 40. See if I get filled.
I'm going to be keeping an eye on this Teradyne for later in the day. It is trying to make a higher low here on the 5-minute chart, but the 60-minute is setting up as a continuation pattern lower, and the daily clearly is a sell setup. So keep an eye on it to see how much it can bounce or not later on. The Russell kept churning its way higher. The 5-minute on that, well, there's still a minute and 20 seconds left to go, but it's up into resistance and some selling into that now.
That's some nice relative weakness there, Sanjay. So, you know, it looks like a daily, it looks like a swing short. And if you're day trading it, you know, just look at the 15-minute or 5-minute and pick your stop. But I like it. And the $45 calls are 0 by 45.
By the way, I still short this square. It's just grinding or chopping around here under the opening price. But it has shown some relative strength. Yes, of course. I'm still in XLK. I added a little bit to it. I'm, hopeful, of course, that it keeps going down. Maybe it may take until tomorrow, but 68 area. I mean, if it dropped down even to like 68 and a half today, I'd probably take it. Five-minute, a little more than 30 seconds to go, and looks like could set up a measured move back down to the low of the day. We'll see. The first entry was, if it breaks down, I could have to look at individual orders. I can tell you what time it was and then look, was on the second 5-minute bar as it was started to break under the first 5-minute bar's low. Nice. So my average cost is $69.17. And the first order must have been a little higher than that, I think.